Sandeep, to hear from you that this is a time to go out and buy, this is a buying opportunity, heartening when there's so much gloom and doom out there. Would you stick to the tried and tested financials, or you see, more space than sectors like auto consumption?
See, I think obviously consumption broadly is a very broad sector, is the biggest beneficiary in the budget. So consumption theme should play out very well from a longer term perspective. Then in the current environment, our focus is more from a domestic economy, large infrastructure space. Okay. If you really look at even the NBFC, given the interest rate pressure, which can come down. So I think the way you look at the domestic company, insurance sectors, so in hospitality space, even we like pharma, despite some narrative is floating around today. I think is a great sector because cost of production of generic drugs in the US will be few times what you do it out here. So far exemption we have seen, but even some tariff comes, I think Indian companies are in the position to pass immediately. So I think we have to wait and watch rather than just reacting on some interviews or some noise which is floating in the market. I think it's a great opportunity as long you have earning visibility, whether it's from the domestic perspective or from global perspective, I think, and valuations are attractive. I'll be all in such names.
Sandeep, good morning, Neeraj here. Now, could it well happen, Sandeep, that the index stays in a consolidation period because of the uncertainty and not necessarily actual moves happening? There could be negotiations, etc. And therefore, individual pockets of strength and weakness would arise. The way IT is correcting so much, despite the fact that the Nifty is largely well behaved, as you said.
So I'm not ruling out that also, but what I'm saying this year is obviously we said that second half will be better than first half, and within first quarter will be worse and second quarter will be slightly better. So with that background, I will say yes, we have seen last 4 years has been extraordinary, and we have been saying that easy phase of bull run is over. But we are still in bull run, but we are in difficult phase of bull run. And to tackle a difficult phase of bull run, your strategy has to be different. It has to be significantly different than what we all did in last 4 years. So that I think the first thing, the mindset has to change. This I have been highlighting for last many quarters now, saying that the biggest risk in India is that our own expectation risk, because we have built so much expectation in last few years, the benchmark has changed. Once you bring down your expectation, then you will find opportunity. When you go back and look for 12-15% opportunity, you will get. The problem is that when you have 40, 50, 80% expectation and you are unable to fulfill, the frustration comes in, and there's the same markets are not performing. But from the current level, I will look for a buying opportunity in select name, and there are enough opportunity available. We have to just be slightly patient and bring down our expectation. I think end of the day, you will be very happy.
Got it. Sandeep, the other question is, I think, if I'm not wrong, I heard you say that you will probably prefer domestic cyclicals as opposed to globally exposed firms. Now, the thing is, I'm just trying to understand, if there is a very large dip that comes into some of these globally exposed firms at a point of time when we are saying that there are going to be negotiations, Donald Trump himself has said that he's open for negotiations if there are out there, right? Could some of the way the dip in the last 4 months gave an opportunity in the month of March, right? Could some of these give an opportunity? There is some incessant punishment being meted out to autos, to IT, etc. Or would you rather not veer down that path right now?
No, the Dheeraj is that if clarity emerges, let's say in 6 months' time, 2 weeks' time, 3 weeks' time, we don't know the timeline,
Sure,
but I expect that in next 1 quarter, it has to settle. So, okay, this cannot go for a long period of time. So you have to look at from Trump perspective, his term has just started. He will also like to settle everything in 1 or 2 quarters so that remaining 3.5 years will be better for him in terms of managing everything. And that's the way I read it. So if we do get a clarity that this sort of tariff has going to come down, or these are sector will be exempt, or these are the new revised tariff downwards, I think we will get opportunity. And by the time you will see capitulative move, like we were very early to talk about in the month of January that we have cut down our auto exposure, or even we don't have IT exposure with very hardly any names we have. So the background was very clear. We were looking at the US market correction. I had said very vocally that we expect 15-20% correction in the Nasdaq. Okay, if that is the case, then how you play? Better to move out from such names. But now they have corrected meaningfully. I'm not saying they are close to a bottoming characteristic, which we typically look at. But one day, if it emerges, I think I will buy it. We don't have any love or hate relationship with any stocks. Okay, when we felt it was not appropriate time, we moved out. And if some buying opportunity come and we really see the capitulative move happening in auto or IT, I will be the first buyer.